Solana is tanking as Alameda Research wallets become active again, and a new twist in the FTX saga comes out involving Sam Bankman-Fried. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin has faced strong selling pressure and is currently holding under $17,000 levels. Another major development is that the whale interest in Bitcoin has been declining, which could be a sign of worry going ahead. Bitcoin's $1 million value transactions have touched a 2-year low, and whales have been showing very little interest in either dumping or accumulating Bitcoin. Analysis platform Santiment said Bitcoin's ranging prices have a lot to do with declining whale interest. This chart illustrates how closely Bitcoin and $1 million valued whale transactions correlate. If prices continue sliding and a spike occurs, this would be a historically bullish signal. The scenario is true not only for big whales, but even mid-sized whales. The total number of large transactions on the Bitcoin network with values greater than $100,000 have just touched a new yearly low of 8,040 transactions. It clearly reflects the low whale and institutional activity on the Bitcoin network. Struggles for the Solana blockchain platform grew massively following the collapse of FTX. The platform's native token SOL price has tumbled 73% in the past 8 weeks due to sell-offs by FTX's sister firm Alameda Research and investors. NFT projects and validators are moving to other blockchains, and according to on-chain data, Binance's funding rate turned positive on December 27th, and traders were planning to long the heavily retraced asset SOL. However, the SOL price fell over 10% in just a few hours due to massive liquidations. The SOL price made a low of $9.91 today, but the real reason Solana likely dumped was due to Alameda Research wallets becoming active again, which we'll get to in just a bit. The TVL on Solana has dropped from 10 billion to 210 million in just a year, and sentiment data confirms that the developer activity on Solana has also dropped significantly. Cardano is among the very top few cryptocurrencies that stood the test of time amid market challenges. The cryptocurrency is currently ranked 8th based on market cap with a total valuation of $8.88 billion. The proof-of-stake blockchain is among the busiest in terms of crypto developer activity in the last year. According to Santiment Insights, there is a clear divergence between whale purchase activity and ADA price. This is a bullish signal considering that whales kept buying despite the FTX-related crisis in the industry. Data shows that the divergence is clearly seen among whales that hold 100,000 to 1 million ADA and 1 million to 10 million ADA. Also, traders are preferring to hold their bags even as the cryptocurrency's price went down. Former FTX CEO Sam Bankman-Fried borrowed hundreds of millions of dollars from Alameda Research to purchase his stake in trading app Robinhood Markets, according to court documents. In an affidavit provided to the Caribbean court before his arrest, Bankman-Fried said he and FTX co-founder Gary Wang together borrowed over $546 million from Alameda via promissory notes in April and May. They used that money to capitalize Emergent Fidelity Technologies, their shell corporation, that in May bought 7.6% stake in Robinhood. The affidavit provides a new curveball in the three-way race to lay claim to the 56 million Robinhood shares. Crypto lender BlockFi, FTX Group, and Bankman-Fried himself have all attempted to lay claim to the shares, which could be worth over $440 million. Recently, BlockFi sued Sam Bankman-Fried to get its hands on the multi-million-dollar Robinhood stake. However, to stop BlockFi's efforts, FTX asked a bankruptcy judge to halt BlockFi from taking over Robinhood shares. In the affidavit, Bankman-Fried says he and Wang formed a new company, Emergent, to acquire shares in Robinhood. Bankman-Fried said, "I borrowed the sum of $491.7 million, and Gary borrowed the sum of $54.6 million from Alameda. All of the sums evidenced by the promissory notes were capitalized into Emergent as working capital so that it could purchase the shares in Robinhood." The U.S. Department of Justice has reportedly launched a criminal probe into the alleged hack that drained nearly $400 million out of FTX-controlled wallets the night the Bahamas-based exchange filed for bankruptcy. Between November 11th and the early hours of November 12th, massive outflows of cryptocurrency began moving out of FTX and FTX US's wallets. Over an hour after the suspected hack began, FTX General Counsel Ryan Miller tweeted that his company was investigating abnormalities with wallet movements and later pinned a message in FTX's official Telegram support channel saying, "FTX has been hacked. FTX apps are malware, delete them, don't go on the FTX site as it might download Trojans." The official FTX Twitter account remained silent throughout, and in the afternoon of November 12th, FTX CEO John J. Ray confirmed the hack through a statement posted via Miller's Twitter account. Blockchain experts have pointed to several clues that the hacker was an FTX insider, including the simultaneously hacks of FTX and FTX US websites. The hacker, if captured, could face 10 years in prison in connection with a computer fraud case. The crypto wallets associated with now bankrupt trading firm Alameda Research, the sister company of FTX, were seen transferring out funds just days after the former CEO Sam Bankman-Fried was released on a $250 million bail bond. The transfer of funds from Alameda's wallets raised community curiosity, but more than that, the way in which these funds were transferred grabbed the community's attention. The Alameda wallets were found to be swapping bits of ERC20s for Ether, and then ETH and USDT were funneled through instant exchangers and mixers. On-chain analyst Zach XBT noted that the Alameda wallet was eventually swapping the funds for Bitcoin using decentralized exchanges such as FixFlow and ChangeNow. These platforms are often used by hackers and exploiters to hide their transaction routes. For example, a wallet address received over 600 ETH from wallets that belonged to Alameda. Part of it was swapped to USDT, while other parts of the transaction was sent to ChangeNow. The never-ending FTX saga sees a new twist every day, and the latest transfer of those funds to scoop out whatever's left in those wallets is worrying for the crypto community. Many speculated that the pattern in which these funds are being swapped looks like an exploiter, but given Bankman-Fried's known criminal past now, many speculated it could be an insider job to take whatever's left in those wallets. Decentralized exchange Trader Joe just launched its mainnet on Arbitrum, its first move expanding to a chain beyond Avalanche. The expansion from Avalanche's most widely used application by volume is a significant trend for crypto protocols. They're launching on multiple chains in the hopes of growing and reaching larger user bases from a diminished pool as Layer 1 blockchains see a drop in transactions. Trader Joe is working closely with a number of key partners on Arbitrum to initiate the prompt integration of Liquidity Book, deploying new markets on the DEX, and also onboarding new tokens to the ecosystem. Trader Joe plans to continue its expansion to other chains that have strong decentralized finance activity and expected ecosystem growth. Arbitrum and Optimism, both of which are Layer 2s built on top of Ethereum that inherit its security properties, have seen consistent growth in transaction count this year. Meanwhile, Layer 1 blockchains have seen a decline in the same time frame. The International Chess Federation announced Friday it's partnering with the Avalanche blockchain to bring its competitions into Web3. The partnership will create operational efficiencies for players and federations and improve game integrity, such as publishing tournament data and player rankings on-chain, as well as an AVAX-hosted tournament prize pool. This also places Ava Labs, the builders behind the Avalanche blockchain, as featured sponsors at physical chess tournaments around the world, including World Chess Championship and Chess Olympiad. The Federation's Web3 integration follows alongside the chess world's gradual embrace of digital mediums. The Federation says more than 100 million people play online chess regularly, with 500 million overall, and there are 25 million virtual chess matches each day. Despite mainstream excitement for Web3 and NFTs declining in recent months, the Federation still sees potential in the industry to grow its sport. The collaboration between the Federation and AVAX also isn't the first time that chess has collaborated with crypto. Chess legend Garry Kasparov launched his first collection of NFTs earlier this month, and play-to-earn chess games such as Meta Chess have been popular for much of the past year. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.